Hello, Mavericks. How's it going? This is Rob Reinwald. I'm joined by Mr. Ankit Sharma, and here we are in the 4th week of August, and I know kids have gone back to school. I got to say, I am very, very happy that I no longer have kids at school and at home, because I remember that first week back to school where they've slept in all summer long, they've stayed up late, they haven't had to do any homework, and then you have to get them back on the schedule. So I feel for all the parents out there. For those of you without kids, this is just a week. This is just another week to you, and it's a great week. It's late summer. Weather's great. It's fantastic. All right, well, let's go ahead and jump into this here. Great trading week last week. I mean, a fantastic trading week. And equities were pretty much flat for the week, and then on Friday we got a big pullback, but mostly flat. We did hear from the RBNZ this week. They raised interest rates by 50 basis points as expected. We saw some volatility out of the Kiwi right after the announcement, but about 30 minutes to an hour after the press conference, we saw the Kiwi weaken pretty substantially. And we also got a pretty big sell-off, especially on Friday in cryptos. So all week, cryptos crept down a little bit, down 1%, down 2%. And then on Friday, they just tumbled anywhere from 7 to 12%. Big sell-off on Friday. We had some other key economic reports this last week. On Tuesday, we got Canadian CPI that came out as expected. As you can see, Aussie wage price index a little bit less than expected, but the really big story this week was the RBNZ came out. Like I said, the Kiwi was volatile right after and then ended up weakening. We got greater than expected CPI out of the UK. Retail sales in the US, I'm going to call this a mixed bag. It was basically right in line with expectations. The headline number was lower, but the retail sales without automobiles was actually up 0.4%. We got the Fed meeting minutes, and then look at this, the Aussie employment report, a huge miss, just an absolutely huge miss on the headline number, but an improvement on the unemployment rate, fairly mixed. Let's take a look and see what all of this did this week as far as the numbers go. If we take a look at equities, you can see the S&P was down about 1%. The world equities down about 2%. And look at cryptos. Big fall in crypto. Most of that came on Friday, but look, we had 4 down days in crypto Monday through Thursday, and then just a big tumble on Friday. Gold sold off. Oil was about flat. Oil was volatile, ended up flat, but during the week it was up 2 or 3% at one point, down 2 or 3% at another point, and just ended here flat. Let's take a look at the S&P. We talked about we were reaching this band of resistance up at the 4320 area, and you can see that coincides perfectly with the 200-day moving average. We came up there and touched it. We backed off a bit on Wednesday and Thursday, and you can see Friday, we just came down here. So there's no question here. Again, we need to understand that the markets move in waves. Assets move in waves. So we have a wave higher, and then a fall, and then a wave higher, and then a base, and then a wave higher. And the question was, are we going to get a base or are we going to get a pullback? Here we got a pullback, here we got a base. At first it was looking like a base, and now we're getting a pullback. So we really just have to take a look and say, okay, it's now looking more like a pullback than a base. So the question is, where is the support line? Where is it going to come back to? And we have to take a look at where it broke out from. Somewhere around this 4160, maybe 4180 area, somewhere in this range, which also coincides with the resistance we saw back in June. That looks like the next stop for this market. So that means that this week we're going to likely be looking at a couple of down days before we likely get some sort of bottom and a bounce. Anka, what's your call on the market here?
I think I'm definitely in line with you here. I think the way markets are, that 200-day moving average, is a very key level of resistance. So it's a psychological level that needs to get above to get bullish. But yes, at this point, today's a big option expiration day, and we actually are, most of the losses that we're seeing this week is coming out today. So I think we still need confirmation where market wants to go. I think as far as the bullishness goes, I think this is where don't really feel comfortable getting bullish unless we can get above that 200 moving average. I think that would be the last straw here, holding this market down. But it's not really a point here that you can really get bearish. You can't just use that 200 moving average as a sign and say, well, if it doesn't get above, I think it's going to roll over. I think we are in this little period here where the market is going to seek direction. We are off from the bottom. I mean, 16 to 17% that we've rallied off the bottom. So I think there's enough little wiggle room here for the market to actually do nothing before it actually can go anywhere. So I think that Labor Day weekend and after that, as the volatility turns back into the markets, I think that's something that I will be looking for. But the next week or so, I think the outlook is really, for me, not so bullish and not so bearish. I think we can just consolidate in a smaller range here. So that's my outlook, Rob.
Thanks, Ankit. And one other thing to discuss is that we are running into a seasonably weak period of the markets. September is typically the worst month of the year. The most crashes in the market have happened in September. Septembers are dangerous, and so we can't ignore that we are coming into a period of time where we usually see some volatility and some selling in markets. Now look, these seasonality patterns don't happen every single year. What happens is you take a look at the data and you say, oh, 6 out of 10 years, it typically sells off in September. Look, we could easily have one of the years where we rise in September. We easily could. We have no idea. But you at least have to know that there's a yellow caution light in late August saying, hey, if you don't know this, there is potentially a weak period coming here. So as Anka said, I don't think you can get bullish here. You can't get bearish, but you also need to have in the back of your mind the seasonality patterns that these are the times where the market has gotten really weak in the past. So we're going to be sharing this with our stock and options group as well as our currencies group, and just let everyone know, hey, you've got to be cautious here. Don't load up on bullishness here because we're running into seasonal patterns. If it doesn't happen, okay, maybe we left a little money on the table. But if it does happen, we'll be positioned very nicely to pivot and go short and make some good money. We take a look at what happened in currencies last week. You can see Kiwi was the worst performer, down 2%. I really liked Kiwi short all week long. It was a great one. Aussie fell after that employment report. And look at the dollar. The dollar that was written off for dead. I was really looking to take a short in dollar after it broke its 50-day moving average. The dollar said, hey, not yet. Not quite yet. Very strong, and it pulled the CAD up with it. I look at this move in CAD being mostly because the dollar soared so much. It kind of pulled this along with it as they are correlated. So dollar strength is back on the table. Take a look at yen, though. Yen didn't do anything. And I also really like the pound short, even though it had a flat week. Both euro and Swiss franc had a little bounce. I really like when euro bounces because every time euro bounces, I'm taking shorts in it. We'll take a look at Swiss franc. It looks fantastic on a chart.
Hey, Rob, I just want to point out about this whole dollar move. I mean, I know I had a lot of questions about the dollar strength because, this is where when you start to see numbers like this, you have to kind of look back in time. And this is an extraordinary week for the dollar. I mean, considering we were sitting at a -2 on a dollar as the trend goes, I mean, I look back and look at the dollar move. I mean, this was one of the biggest moves we have seen since March 2020 in the dollar. And before that, I think it was back in 2015. So this is a big week. I know there was not a whole lot, on the docket that really moved this dollar, but I just want to point out that this was a much larger than a normal move that we see in the dollar, which is where, I mean, maybe the seasonality patterns are kicking the dollar a lot more higher, but I think it's something to point out that the dollar is moving in this big fashion that you need to be careful about, especially as we go into the holiday trading for the next couple of weeks, and then we go into the Labor Day. I think the dollar really is the one that could really stands a chance to move quite aggressively one way or the other.
And we did hear from several central bank governors this week that basically said, hey, I want another 75 basis points. The market is betting on 50 basis points. And we heard from several Fed governors that said, no, we need to keep going. We need to do 75. So I think that definitely helped the dollar out. which in turn is a big reason why the cryptos have sold off. The US dollar and cryptos have actually been showing a lot of negative correlation here lately. When the dollar gets strong, these tend to get weak, and with the dollar weakens, these tend to get strong. So there's no surprise that these weakened when the dollar spiked so much. So let's really take a look at our equity market analysis here. We already took a look at the S&P. Let's take a look at the VT, and we see something very similar where we are pulling back. We probably make it back into this range. So that was the range we broke out from. As you can see here, we still have a little bit to come down. As Ankit said, I think this is going to be a flat next 2 weeks, but I think we have the tendency to drift lower than higher over these next 2 weeks. Just a mildly bearish, but still all within the confines of this uptrend. We are above the 50-day moving average, above the 20. This is an uptrend. So again, as Ankit said, you can't go short, but it doesn't mean you have to be a super bull. And you can see here, cryptos, they broke terribly, and we had been pointing out this trend line here. And I said, once this trend line is broken, this move is over. And it was really broken Wednesday, Thursday, and you can see the punishment that happened on Friday. So sorry, any of you crypto bulls, I now have to say that I'm going to have to bet against you because this is definitely more bearish. Now look, we're still above the 50. That is my line in the sand. As long as something is above the 50-day moving average, I want to be more long than short. Once this goes below and retests it, definitely this is going to be a signal to be short in cryptos. Let's take a look at the schedule next week. So we have European PMIs across the board on Tuesday. Okay, the PMIs haven't been all that big of movers, so I don't think this is going to be real market moving news. We've got the secondary number on US GDP on Thursday. Again, these numbers, you always are interested in the first GDP report of each quarter. So each quarter, you get the preliminary, you get the actual, and you get the revised. This one is the actual number. So they're going to take a look at the number they released 3 weeks ago and say, hey, you know what? We looked at more data and we changed it. The forecast is for no change, but we don't think this is going to be a big one. Let's talk about Jackson Hole Symposium. Now, this is a funny little thing because they've been doing this Jackson Hole Symposium every year for the last 30, 40 years. And what it is everyone goes to Jackson Hole, Wyoming, and all the central bankers around the world, they talk amongst each other and have little courses and classes and have meetings and give speeches. No one really cared about it. And then back in I want to say it was 2012, 2013, Ben Bernanke on the podium there completely changed the monetary policy outlook of the Federal Reserve. And everyone was surprised because they usually just give canned speeches there. But all of a sudden, he now did a big shift in policy for the Federal Reserve. The market freaked out. And then the next year, I think Ben Bernanke learned his lesson because the next year was a really, really boring speech and the market was just on edge. And then all of a sudden, the year after that, he did it again. And so now it's people look at this Jackson Hole Symposium and say, hey, this is a platform where central bankers can completely rewrite their policy that they told the market in their meetings. I don't think it's going to be a big change. There's not much of a change that can be made, but we do have to talk about and be aware that there could be some big moves, probably more on Friday. I believe I believe Chairman Powell speaks on Friday morning. That's going to be the most likely time we see a big move. But again, we just have to be aware of these things as currency traders. So this week, we've got equity markets. I think it's slightly down, nothing all that much. Central banks, we are hearing from some of the central bankers in the Jackson Hole. Be aware of it. We don't expect there to be any big fireworks, but there could be. And then economic reports. In economic reports is really just the European manufacturing on Tuesday. So let's get into our currency analysis. We're going to take a look at each currency. We're going to break it down by a trend score, a longer term view of it, and a velocity score, a shorter term view of it. Up first is Bitcoin. Now Bitcoin, you can see we broke support. We broke support and it is now in a downtrend. And it just is. We broke it. We broke the 50. Everything's going down here. So look, it's early. We're only at a -1 on trend score, but this velocity score is looking ugly. The only thing that's giving us a little pause is that the RSI literally can't go any lower. It can't get any lower than where it is. And so we think there's likely to be a little bounce, but you want to be a seller into any one of these bounces here on Bitcoin. Bitcoin Cash has been the weakest of all the cryptos. It just hasn't made new highs. Like you'll see Ethereum has made a new high over this high, but Bitcoin Cash is looking really bad. But it's just early, so it's a -1. And again, -3 on this one. This is just looking nasty here. Ethereum was the standout. You can see Ethereum made a nice run here. We actually had some nice waves here, nice waves. But you can see here, it is just in some trouble. However, compared to Bitcoin and Bitcoin Cash, it's only breaking its 20-day moving average. So this one is stronger. Let's call this one a 0 + 1, somewhere in there. The problem is the velocity on this one's pretty bad. So short term, it looked like it's heading lower. But if cryptos do turn around, you do want to be in Ethereum. Ethereum is showing the most relative strength. And you can see Litecoin here. Litecoin looks bad. It never made a new high. Remember, Ethereum was able to make a new high just 4 or 5 days ago. Litecoin wasn't. So we're seeing lots of stuff breaking below its 50 and nothing but selling here short term. Let's take a look at Forex here. The dollar. Right here, we have this wave down. We have this here. We have this here. I think we can be pretty sure to call this a ABC corrective wave. And for those of you that aren't Elliott Wave people, and again, I'm not a huge Elliott Wave fan, so don't take this too far out of context. The thing I do like about Elliott Wave is that people that use Elliott Wave understand the markets move in these waves. And so they say, okay, waves are moving higher. Okay, I'm going to do this. But I know that at one point, these waves will move lower. And these ABC corrections happen in longer term uptrends. If this was an ABC correction, then this is stage 1. Stage 1, and then stage 2 is typically a very short, sharp pullback. And stage 3 is a huge expansion. Stage 3s are usually the largest of the expansions. So looking at this chart, if I'm really thinking about waves and how it moves, this could potentially be the new start of a 3 or 5 wave pattern higher in the dollar. I know I'm getting a little ahead of myself because we just barely cleared up above the 50-day moving average in the 20, but right here, right now, everything looks really positive on dollar. I think we could get a nice move. Again, I'm expecting for it to move higher. That wave 2 is usually a short, sharp pullback. Wave 3 is really what I'm interested in. And this could coincide very nicely with seasonality patterns. Imagine that if the equity markets fall apart in September like they do a lot of years, this would coincide perfectly with the wave 3 on the dollar. So I do like dollar here, and I think you want to be more long than short dollar. I actually think you only want to be long dollar.
Hey, Rob, well, I agree. I mean, dollar is interesting play here. And there's a lot of reasons why, because, first thing we take a look at euro against some of the key benchmarks. And I think the dollar is testing a key benchmark against the euro. So I think if we can give up some certain levels of sort of these currency pairs, I think dollar has a lot more, run, a lot more area where it can run further up. I mean, if you take a look at dollar against the Aussie or the Kiwi or even the CAD, I mean, we're solid off in these pairs, from that 2020 highs. So I think the case for bullish dollar can be made, but again, there's many times when we have seen we got really bullish on the dollar and it just didn't last. So I think we probably get this jitters until the next FOMC. Good data, then next thing you know, we see stronger dollar, bad data, some comments from the central banks, pullbacks. I think you want to take a look at dollar as a currency to trade, along with the risk sentiment as well, because right now we are not seeing the Japanese yen is not really acting as a safe haven currency. So I do agree with the whole point is that if the market fell apart, I mean, dollar is really the only place that people flock to, instead of before, where we see the dollar and yen both equally get the lift, or even the euro we have seen acting as a safe haven currency. But right now, I think it's just the dollar. So if that's the case, that dollar definitely has a lot more room to gain, especially in certain currencies against like the Aussie or the Kiwi or even the CAD. I mean, CADs have actually very positively correlated with that, but there's definitely a lot of areas where dollar can actually go higher. So I do like that. I think dollar you just want to be careful about.
Yeah, and you mentioned the yen not acting like a currency of safety, and it hasn't done anything. I mean, take a look at these candles over the last 10 days. There's been no movement. So this is where, again, we tell all of our traders, don't trade things that aren't showing any movement. So it's just an easy one. Don't trade yen until it does something. Let's move on to Swiss franc. Now, we've been telling our traders, hey, don't trade Swiss franc until it does something. Well, guess what? Look at what it's doing. It's doing something. It's finally breaking out of this high base that it's been in for over a month. So I like Swiss franc as well. I think Swiss franc looks great. Dollar and Swiss franc look like really good buys here. Let's talk about euro, because euro is my favorite short here. It's been my favorite short for a while. And, but the velocity lately has just not been there. Over the past month here, we got this big move down. We got a nice rally up. We got a nice fall. But really, since like the 28th, it's been really pretty much going nowhere. This was a decent move here from about the 10th to the 15th. That's about it. I think we are waiting here and watching for the next break, but I do like euro on the short side. It's just not right here right now. It's not showing us the velocity. So while I do like euro short, I've got to put it on the shelf until it actually breaks some key levels. And we're going to take a look at some charts on euro for sure. Now, we saw that the euro wasn't really moving. The pound hadn't been moving for about a month and a half. Again, we told our traders, do not trade pound in this situation. It's not moving. It's not going anywhere. But all of a sudden, now it's going somewhere. Now we're getting moves. Look at this. Big move down, 3-day, really strong move up. And now we got a 2-day move going down, looking to break support. I like pound. Pound is my second favorite short for the week. So what is my favorite short for the week? Well, it's not CAD. It's not CAD. And you can see that the CAD has done virtually what the dollar did. Tickle down a little bit below the 50, rally back up, fall, make a new low. Again, we could label this A, B, C. And you can see we've had 4 days of pretty strong runs. I don't think the CAD is doing anything individually by itself. I think this is being tied to the dollar. And when the dollar rises, it pulls this up with it. I don't think there's anything special with CAD right now. And I don't love to trade things that don't have a story, that they're just getting pulled by something else, because I'd rather trade that. I'd rather trade the actual thing that is getting all the news and causing the reactions than trade the thing that's just getting pulled along for the ride. So look, CAD is bullish. It's moderately bullish. But why would you trade CAD when you could trade dollar that is wildly bullish at the moment? So for me, CAD is just not all that interesting as a trade. Aussie here, when you take a look at the trend score, we are right between the 20 and the 50, and that is just no man's land for us. Whenever we're between the 20 and 50, it's basically saying don't trade it. We popped out a little bit. We had a little bit of strength for about 2 weeks, and then we're falling right back down. So to me, Aussie is a no trade. Until it breaks out of this one way or the other, I can't look to trade it. So early on next week, Aussie's on the shelf. Take a look at the Kiwi. Now, the Kiwi spent a long time doing nothing. Look at all these candles. Look at all of these candles. And then all of a sudden, look at these candles and these candles. This is when you want to trade. This is good trading. I like the Kiwi here. It's breaking down. We are running into support level here. But on any sort of bounce or base, I want to be short Kiwi. And right now, it has got a lot of selling to it. If we look at the trend scores, the best trending stocks to the upside, dollar and Swiss franc. The best trending stocks on the downside are the euro and the pound. So again, Trend score is on a daily chart. We're looking at big picture. Big picture, what are the currencies that are really moving at the moment? And these are the ones. Velocity score, we're going to take a look at what's really moving right here, right now. CAD and dollar have a lot of momentum. And like I said, the CAD is just along for the ride. So I don't see any need to trade CAD. Look at dollar. And the Kiwi's got a lot of selling to the downside. So right here, right now, the best pair to start off the week is Kiwi Dollar. That is the best trade to look at the first of next week. And then you want to be keeping an eye on these pairs: Euro Dollar, Pound Dollar, Euro Swiss Franc, Pound Swiss Franc. These are the ones you want to take a look at for when the velocity scores start to tell you, hey, it's time to go, because these are going to be the biggest moves. These are the biggest trends at the moment. So the bullish trades, dollar, Swiss franc, we'll throw the CAD in there because it's being pulled by the dollar, but really dollar, Swiss franc are on the top. Bearish trades, Aussie, Kiwi, short term, but longer term, Euro pound. So looking later in the week for Euro pound shorts. So speaking of those pairs, let's take a look at some of those pairs and let's really detail in some of the entry points, some of the stop points, what we're really looking for early next week. Let's take a look first at Kiwi Dollar. Okay, so Kiwi Dollar here on a 4-hour chart. You can see that we've just had moves down and then base, down, base. We just got a down move. So again, we think about waves. We think about when things move in waves. We just had an expanding range, an expanding wave. We're likely going to get a range that corrects. And that correction is either going to be a bounce, which is kind of what we saw back here in August, or it might be more of a base, which is what we saw here in August 17th through the 20th. Here we got this move down. We think there's likely to be a base or a bounce. We want to absolutely be sellers into that. And if we take a look at this daily chart, we can see that there's a ton of momentum here. This is the stuff we like to trade. These moves are easy trades. You don't get stopped out. They go positive for you pretty quickly. And then you can just move a trailing stop down and you can make a ton of money. These are the best moves to trade in. This is a very good trend and very good move to trade in. And look, yes, it's going to be over at some point. Is it over in 5 candles, 6 candles? This move was 8 candles long, 8 days long. It had big red candles. We could easily have 2-3 more days of this selling till we really get down into this 60-90 area. So that's a nice 90 pips. That is a 1.5% move. That is definitely enough meat on the bone to catch a trade. The other pair I want to take a look at, boy, this is a tough one because I really like Euro longer term, but right now, the pound is the one that's showing more weakness than Euro. So I'm going to start the week off focused on pound Swiss franc. Now this is the daily chart on pound Swiss franc. You can see the daily chart looks great. We just broke major support there at 114. We haven't been this low in a very long time. We're in no man's land. We'd have to go back. I don't know. We could even maybe go back 20 years and never find these levels here. In the short term, 4-hour chart, again, the same thing, waves. Move down, 12 hours, move down. Okay, you can see right here, we are moving in a sideways correction pattern. Okay, this one was roughly 12 candles. We're about 6 or 7 candles into this. So we just wait. 131.15. 131.15 is going to, sorry, my dyslexia is kicking in. 113.15. 113.15 is going to be the point that you really want to have an alert sitting out there. Let it go sideways. Let's not put our money in there and be frustrated while it chops around. Let's wait until we get the momentum back. Hopefully this RSI can maybe come back up into this 50 range, get a little bit higher, give us some more momentum for when we finally break down. But 113.15 is my alert point on pound Swiss franc. Anka, what are you looking at?
Yeah, well, there's not a whole lot that I'm really paying attention to right now because, again, like we are looking at momentum, and I've noticed that, especially in seasonality patterns like this, what you tend to get is that you get currencies that really start to move, and the other currency doesn't do anything. I mean, that's when momentum is starting to pick up, and that's exactly what we're seeing. A day like today, I mean, Rob, if you want to pull up Aussie against the Kiwi, I mean, just to give a contrast, I mean, we looked at Kiwi Dollar because that dollar has a lot to do with it. Take a look at Aussie Kiwi. I mean, just a one single straight arrow up. So we're getting these, pickup in momentums that, usually last for a day or two. I mean, they don't really last you got to keep in mind the seasonality pattern. Sometimes it's hard to find catch a trend. I mean, they might run into a reasonable resistance and then maybe the trade is over. So I think that's the kind of a way I'm looking at markets right now, is just finding out what's moving and then just focus on that. I mean, Aussie's, the Kiwi was a great example, and that doesn't necessarily mean the Kiwi might be the bigger one on a Monday or Tuesday. So I think that's the idea that I'm looking at, just to see what's really moving, and then based on that, we can make a call on that. So Rob, if you want to pull up Aussie Kiwi on a daily chart, if anybody that's trying to figure out Aussie Kiwi on a day, if the Kiwi is going to have the sustained move here, I mean, you can see that we are back at the resistance. This is a range that we've been in for the last few months. So a lot of times we got to the level where, got excited, and next thing you know, it just didn't go anywhere. So I think if you're looking between the Aussie and Kiwi, a day like today, huge contrast, that's the level that we need to see this broken out of. If it doesn't break out of it, I'm actually going to throw Aussie in the mix there as well, because at that point, Aussie might look like a better short if the Kiwi or Aussie Kiwi is sitting at the resistance level here. Another one, Rob, I'd like to take a look at is the dollar yen, just to kind of talk about some of the pairs that are actually resurfacing back into some key levels. I mean, dollar yen is now back at this 137, 138 area. I think this is the area that you need to be careful about, because now this is where we're running into resistance, and we need to clear out of that resistance in order to catch a traction more to the upside. So we have the clear resistance right there. I think once we get that above that, we can see a more acceleration. But there's one thing we need to kind of keep in mind, is that there's some wide ranges on a lot of these pairs. And as soon as we get into those zones, we could see a potential slowdown as well. So that's the one thing that you need to pay attention to, is that we don't see a slowdown in that area. We just see more consolidation, because that will give me a confirmation that it wants to go higher from there. But those are the areas that I would like to kind of talk about here. And like I said, the whole euro dollar is another one. Rob, if you want to pull that up. Lastly, I know there's a lot of questions about the euro dollar and where euro dollar is going to go. And I think it's the same thing. The parity level is where we need to watch out. We've seen previously actually got below that level, and then it just didn't really go anywhere. But I mean, right now, I think we can make a more of a case here that the euro dollar wants to break lower. So that parity level, I know traders are watching, but I personally think that we can easily take that out again as we're taking a second shot at it. So next week, like I said, I'll be paying attention to more momentum, see what's really on the move. I think that's how the next 2 weeks needs to be. While we don't get a lot of push from the equity markets, we just need to play out relative strength and weakness. After that, after the Labor Day weekend, that's when we see volatility picks up. And I think that's where we'll probably be looking at more volatility plays, more reversals. But right now, momentum is where we need to be focusing on. Back to you, Rob.
To wrap this up, we are seeing equity markets slightly bearish. Now look, we just had 4 straight weeks of up weeks in the market. We're up 15, 16% off the bottom. We could easily have 1 to 2 weeks of a pullback just to bring us back down into some certain areas. So we are telling our stock and options traders that they want to be cautious here. They want to be cautious. They want to make less trades because we're running into seasonality patterns. We're not super bullish, but we can't go bearish. We are not telling that to our currency traders, because the trends look fantastic here. So to our stock and option traders, we're saying, hey, everyone chill out here. Everyone just play safe until we give the green light. Currency traders, you've got the green light. This is a fantastic trading market. There's moves happening. Make sure you are following strength and weakness, as Ankit said. That's one thing Ankit is best at, is that he's always dialed into what is moving, what is strong, what is weak, and those are the plays he makes. We're going to be making a lot of content this week. We're going to be sending them out to you via recording, but as always, we will be meeting live on Wednesday for our midweek Currency Room update. Thank you so much for joining us. Have a great weekend, and let's go get some pips this week. It's going to be a good week of trading. Goodbye.